Okay, so for the last 7 days, I've pretty much locked myself in my room and I've only emerged for, like Christmas stuff. Now, you might be asking, why? Why, Daniel, did you lock yourself in a room and what could you have been doing? And no, I wasn't playing StarCraft like all the other Korean guys. But what I was doing was research. A lot of research. I mean, research report after research report, and article after article after article. A lot of reading, thinking, searching, and listening, and all really just to answer one simple question, which is, what is the best real estate to invest into for the year 2022? Now, to say I spent hours on this is an understatement. It feels like it's been years. So in the spirit of New Year's resolutions, I'm going to take all that time I spent and condense it by sharing with you my top 3 real estate assets to invest into for 2022. Now, before we get to the list, let's talk about even more good news, which is that according to CBRE's 2022 US Investment Outlook, which is right here, the investment volume, which is the amount of transactions that happen within a certain period of time, is projected to increase 5 to 10% in this upcoming year. And what that pretty much means is that, well, people are looking to do more deals going into 2022 compared to even 2021. And this is being fueled by the projection that more capital is going to enter the real estate industry, more so than in 2021. And of course, with continued lower financing costs. And we also can't forget the fact that a lot of the capital that's going to enter the real estate industry is from investors not only in the US, but also outside the US as well. So long story short, it's projected that not only more investors are going to enter the real estate business, but they're going to be even more trigger happy than they were in 2021. Say hello to my little friend! Now, of course, before we move forward, a little disclaimer. This is not formal investment advice, guys. These are just my personal opinions that I have formed with research. I highly encourage you guys all to do your own research and talk to your financial professionals on what's the best for you. Now, guys, with that said, let's move forward. And don't forget to stick around to the end of the video because I did save the best for last. And that, my friends, is what brings us to the first point, which, by the way, okay, granted, a lot of assets performed really well in 2021, especially real estate. But if you're looking for who to give the award to for which asset performed the best in the last 12 months, well, that award will go to self-storage. As a matter of fact, the 5 publicly traded REITs that are oriented around the self-storage business, well, they performed returns between 35.6% and 47.4% for the year of 2021. And even looking at occupancy records, well, 2021 was a year full of broken records in terms of how high occupancy rates got and how well they sustained, which was around 95% all throughout the year. And according to a small local publication known as the New York Times, self-storage did so well in 2021 that BlackRock took a huge bet on self-storage and was so optimistic that it purchased Simply Self Storage. It acquired Simply Self Storage for $1.2 billion. So with that said, in my opinion, here's the real reason as to why self-storage absolutely just crushed it in 2021. And it has a lot to do with this chart. What this chart shows is the home ownership rate in the United States. And what I want you to focus on is Q1 of 2020, which is right before this giant spike. The home ownership rate there is 65.3%. But by Q2 of the exact same year, which I cannot stress enough, it's 67.9%. That's almost a 4% increase within a span of 3 months. I mean, that is absolutely unheard of.
That's insane.
And if you actually zoom out and look at this chart starting from 1965, which is when the Fed started tracking this, nothing comes even remotely close. But then we see this giant dip, and as quickly as it rose, it dipped almost just as fast. So at this point, you might be asking, well, what does all this have to do with self-storage? Well, let's actually look at what happened. So you see, you had a lot of people who bought homes in the beginning of 2020. And whereas a lot of people thought that the pandemic was going to destroy the housing market, it actually set it on fire. And every realtor in America, didn't matter where they were conducting business, were saying, oh my gosh, the market.
It's so hot right now.
And what did this have people do? It had them start selling their home. I mean, you had a wave of individuals in their 50s and 60s selling off their home, knowing that they'll get $20,000 to $30,000 above their asking price. And of course, this really motivated and triggered the downsizing that they've been wanting to do for a couple years.
Get out of my house!
And well, what do you think happens when people move from a 4-bedroom house to a 2-bedroom apartment? you need a little bit of extra space. And considering that most experts are saying that 2022 is in many ways going to be a 2021 part 2, I would say that self-storage is a pretty strong and viable option for individuals to look into. Now, 2023, that's a whole different story, as because the indicator for why it was so successful in 2021 isn't necessarily constant or sustainable. But what keeps me optimistic for the future is that millennials, my generation, and Gen Z alike seem to be at least gravitating away from owning a home more towards renting. And that gives a pretty bright future for the business of self-storage. And also the Great Reset, because remember, you will own nothing and you will be happy. Now, speaking of the future, this is what brings us to point number 2. Now, with that said, I don't think I need to regurgitate or mention how popular cryptocurrencies and NFTs have gotten in the last 18 to 24 months. I mean, chances are if you're watching this video, you have a pretty decent idea on what an NFT is and what different cryptocurrencies are available and out there. However, a lot of you may not know what data centers are. Well, according to Million Acres, a data center is a facility that provides a secure and reliable environment for customers to house servers and also other computing equipment. These facilities generally have a reliable and uninterruptible power sources along with cooling equipment and a high level of security. And well, if you continue with the same source, Million Acres, they actually predict and project that by 2025, artificial intelligence market will grow from 11 billion to 90 billion, which by the way, is only 3 years from now. And also considering the amount of complementary businesses and activities that are surrounding stuff like AI, cryptocurrencies, blockchain, NFTs, the rapid growing future of a metaverse, along with other channels that I haven't even mentioned, data centers from a brick and mortar standpoint could be a great way to ride the wave of what's happening in terms of technology. And look, a lot of investors, I'm sure, are skeptical. They're saying that cryptocurrency will always remain a commodity and the metaverse is just some silly trend. But here's my question to you, especially if you're over the age of 40. 20 years ago, did you ever think for 1 second that you'd be inputting in your credit card information, buying things off the internet, and have it show up at your door hours later, let alone days later? I mean, we spend hours on this thing. So why wouldn't we spend hours in the metaverse? Just think about it, that's all I'm saying. Because with this new wave of technology, there are certainly opportunities within the real estate space. And that's one of my favorite things about investing in real estate, is that no matter what happens with technology, with mankind, there's always going to be an opportunity and need associated with real estate, and people will always need a place to live. That hasn't changed in the last 1,000 years, and it won't change the next 1,000 years. Which leads us to our last and final point, which, by the way, remember this chart? Yep, the home ownership rate in the US. Well, currently what's interesting is that the average home ownership rate for the last 20 years was 65.4%. And well, guess where we're at right now? Yep, 65.4%. We're exactly in the middle of the road when it comes to home ownership in the US. But guess what? None of that might not even matter. And here's why. Because according to Business Insider, we are still 7 million homes short of solving our housing shortage crisis. And the best that Congress can come up with in terms of a real plan to combat this is to create 1 million homes with the plan that they signed. Which, by the way, would lead me to say that I believe multifamily and apartment complex investing looks to be really solid for 2022. Now, at this point, some may say, hey man, why don't we build just more homes, man? Why can't we just take all the shipping containers and make tiny homes, man? Well, first and foremost, most of those shipping containers are right now out at sea, just sitting there. And also now might be a good time to mention that construction costs spiked year over year in the month of November, 15.3%. And by the way, that spike is the highest that we've seen in over 50 years. We hear you, millennials. So not only do we have a massive shortage in housing, but we also have very little hope in homes actually being built without them costing an arm and a leg. And at the same time, we have the millennial and the Gen Z generation, the biggest in size one after the other, who are more so leaning towards renting than being burdened by the cost of home ownership. And all three of these things point towards apartment investing being great not only in 2022, but potentially for the next 5 to 10 years. And just to associate all of this with real data, according to Globe Street, there were 4 times in 2021 where the vacancy rate for apartments across the US hit record lows, with the end of the third quarter in 2021 seeing a vacancy rate of 2.7%. And within the same time period, new lease demand went up 50.5% year over year, and apartment resident retention, which is how many people are actually staying in their apartments, is up 58%, which by the way is also a new record. And according to Apartment Guide, nationwide rent prices for both 1-bedroom and 2-bedroom apartments have increased significantly year over year, 21.3% and 16.7% respectively. And last but not least, CoreLogic also shared that the third quarter of 2021, we saw rents hit a 16.5-year high, with many experts saying that it will not slow down in 2022. Now guys, if you want to do this yourself, raise capital and create a real estate business and learn how to do this, I created a 4-part free course right here on our YouTube channel, and you should be able to see that right there. Now, if you're an accredited investor and you're wanting to do this passively, there's a link in the description for you as well. So with that said, guys, don't forget to subscribe to our YouTube channel, share this video, and if you're feeling extra so generous, like this video as well. So with that said, guys, I'll see you in the next one.